This is a tutorial from Divergence Analysis on how to use one of our apps on the Bloomberg terminal, and this study is DVAN Short Term Trend Study. For this example, we're using the SPX index, which is very popular worldwide, and we're using an intraday chart, 60-minute price bars. Below is the algorithm, and this is our macro oscillator, and what it's designed to do when it turns green like this, it's shaded green, it's showing you the most forceful part of the up move. And as you can see, the force pulls back to base, force pulls back to base. But we're going to use the tracking, and we're going to show you with prices. This is what it shows you, that move right there. Okay, now you see the force turning red, shaded red, so it's telling you prices are coming in. I'd like to point out that this does have a zero line right here highlighted. That is the larger differential between positive and negative. Okay, so as long as it's above zero, it's more positive. When it falls below zero, it increases your expectations to getting more price decline, and vice versa. So here we go, negative. You see it working through zero. Notice where prices are up there. Haven't really broken down yet. And the algorithm goes on below zero here, and prices get hit a lot harder. All this is showing like this continued greater force. Now you see that force waning a little bit, and right here at this point, which is one period off the bottom, it's showing you upward force again, and of course you get a pretty good bump in the market here. Alright, that reverts back, and notice you're still under zero here, so you're still working in a negative manner. Okay, and then it reverts back to negative again, and the downtrend resumes. The downtrend resumes, but you see that the downtrend is not as forceful here as it was here, and that's when you know that this move is probably coming to an end. You don't have to guess about it. It'll be shown to you when it really turns up. Right here, turns green right off the bottom at about 1540 on the S&P here, and then we get into a up cycle, which also goes through zero, which means it's gaining momentum, more positive now, and takes you right on up through 1580. So this right here to right here is over a 3-day period, is a 40-point move in the S&P. I'd also like to just briefly show you how we can overlay studies, and I'm going to put the DVAN signals, which there's another tutorial for, but I'm going to overlay DVAN signals on here. Here's the DVAN signals algorithm, velocity study, and then here are the actual buy signals and sell signals. So you see a sell signal here. It works complementary with short-term cycles, even though short-term trend cycles are actually going to probably be a little quicker, and that's what they're designed to do. So we'll take that off. I'm going to show you one more thing about this. I'm going to bring in another chart here into the window. You can actually, just because this is short-term trend cycles, you can actually use this on a weekly. This is the SPX weekly, and this is also overlaid with trigger signals, DVAN signals. And here are the buy signals and sell signals in a larger aspect. The short-term trend cycles show you the forceful moves, pullbacks, still above zero, and now it's kind of working below zero, and you see a buy signal which gets you back up to the top, and then the next week a sell signal, and then with this force showing you below zero, that's when you get the bigger hit. From right here on a weekly to right here when it gets a buy signal, that's 200 S&P points. So the studies you use are not so much long-term, short-term, whatever. They're more about how you trade and how you recognize and analyze a market and your style of trading.